Welcome to the 2026 edition of Cameron Harrison's Investment and Economic Strategy Guide, where we explore the key themes shaping our investment positioning. As we enter the new year, we find a global economy that is running a bit warm. Inflation sits above target, labour conditions remain tight, and government suspending heavily whilst the US Fed looks set to cut interest rates. This mix should support growth, lift industrial activity, and strengthen commodity demand. However, balancing these strengths are a handful of major unknowns. War in Europe, tensions in East Asia, shifting trade policy, an AI-driven surge in equity markets that is both powerful and uneven, and rising sovereign debt risks. In this year's strategy guide, Tristan Bowman looks at the sharp rise in rate volatility and why the path for policy rates points higher. Matt Nolan examines the AI premium and the shift from capital-light tech to heavy investment models. Closer to home, Paul Ashworth maps out the tug-of-war in commercial property between cyclical stress and structural strength. And Will Fisher shows how the lucky country, once said to ride on the sheep's back, is now being carried by immigration-driven spending. Together, these views frame how we see 2026, which sees us take a cautious view on the Australian share market, where valuations look stretched, earnings are soft, and policy headwinds are growing. Immigration-driven spending and constrained supply should support real assets like industrial and retail property, and within equities we favour global markets for their earnings strength and sector diversification, whilst higher interest rates domestically should support attractive yields in investment grade and asset-backed debt, with the strategy skewed somewhat towards higher quality debt. In short, in a world full of contradictions, we are trimming risk where optimism runs hot, leaning into global diversification, and locking in income where value persists. Thank you very much for joining.